Yeah, and that's a very good point. I mean, think about it, Joe. You buy $1 million business. Your injection or down payment requirement's $100,000. The business is growing at 20% 20% year over year. That's a 200% return on your money. Like, where are you going to get a 200% return on your money? It's
Yeah.
a no-brainer. So to pay 3x for a business is also a no-brainer. And it's like the space shuttle, though. It uses 90% of its fuel on takeoff and 10% remainder of the trip. So why not buy a business that has some sort of historical track record and scale it
Yep.
and get 200% return on your money?
Welcome to Show Me the Nuggets, where each week Joe chats with world-class entrepreneurs to find out the key principles, strategies, and processes that lie behind their outstanding achievements. Now, your host, the no bullshit serial entrepreneur, Joe Troyer.
Hey everybody, it's Joe Troyer here again. Welcome to another episode of Show Me Your Nuggets. Oops, I'm sorry. I mean, Show Me the Nuggets. And today I'm here with none other than Steven Speer. And so guys, today we're gonna be talking about something a little different, but I'm super excited today. Really, I wanna talk to you guys about buying and selling e-com businesses using SBA loans. And so I brought on a referral and now a friend, I would say, of mine, Steven Speer, to talk about buying businesses specifically with SBA loans. And for those of you guys that don't know Steven, he's the founder of Ecommerce Lending Inc. And also Platinum Bancorp Inc. And I'm super excited to have him on the line. My team did a little bit of digging, and they found that he's done over $250 million in funded loans. So, man, I'm super excited to chat with you today. Welcome to the podcast.
Thank you, Joe. Thanks for having me.
Yeah, man. So tell us a little bit about how you got into this space and what you're doing today.
So about 5 years ago, I kept, I was focused on business acquisition financing, but more on the traditional sense, brick and mortar. And I had a client approach me saying, "Listen, I'm thinking about buying a business, but it's online. It's not brick and mortar. I'm going to be selling through Amazon, and can you finance that?" And I said, "Well, tell me a little bit about it." And I thought, well, I don't see why not. I mean, it ticks all the boxes, even though there's not a traditional storefront. I don't see why not. So I started looking at guidelines and all that boring stuff and realized I can do this. So I started with him, and it led to another transaction for a friend of his. And it kind of just blossomed over the last 5 years to quite a viable business model. So that's how I got started. I fell into it, like probably a lot of us have.
That's fantastic. I feel like for e-com businesses, web-based businesses, that at the end of the day, like there's not a lot of people like you in the industry that's specializing in financing these types of businesses. So it's great. I had to seek you out, right, to find you. And I think that there's definitely a huge opportunity for guys like you in the space. And I'm just curious, Steven, to pick your brain and to figure out why we should be financing, right? What rates look like? What do we have to do to get qualified? And we'll kind of, go through some of these questions step by step. When it comes to e-commerce loans, so to speak, I'm curious, is SBA all that you do?
Well, there are basically two types of ways to acquire an online business. One is to simply pay cash. And the other one is through SBA financing. For the most part, there are no other viable financial vehicles to acquire businesses, primarily because there's no there. There's no brick and mortar. There's no collateral. There's no building. There's really nothing there. So it's all considered goodwill lending. And what SBA allows, and by the way, SBA is not really a lending source. They just happen to insure the loans, allowing lenders to lend on what's considered goodwill lending, on loans without any collateral or any sort of tangible asset. So really, it's not only the only vehicle, but it's a very good vehicle because it allows lenders to really lessen their risk and be more open to lending within the space.
Yeah, we're doing some stuff creative financing wise, merchant lending and things like that. We have an audience, and we're doing some crazy things to get deals financed. And SBA is big, and it's on my mind. We haven't went that route before. This year, I've been a part of 3 acquisitions so far, and next year I'm looking for more. So it's super excited to be chatting with you about why SBA. So can you give us kind of a high level rundown of what SBA stands for and really who it's for?
So many years ago, the government, truly realized that the way to spawn growth and increase the economy is lending to small businesses, which are essentially the backbone of our country. And so the biggest challenge was that banks didn't want to lend to small businesses, or they were very hesitant because of the amount of risk. So to make it kind of a win-win situation, because obviously banks make money on lending funds, the government said, I'll tell you what, if you lend the money, we'll insure the loan. And so it was really a match made in heaven, and it spawned growth through the small businesses. So really, it was designed for the small business owner, be it a startup, somebody opening up a restaurant, or now online business acquisition. So here we have it.
Perfect. So who really are SBA loans built for? I'm assuming Americans, right? First and foremost.
Yes.
Because it's backed by the government.
Right. So SBA loans in general, they're primarily for American citizens or green card holders. So they're pretty much limited to that for the most part. And also, in terms of the online space, they're only available to finance online businesses that are domiciled in the U.S. and that filed U.S. tax returns. That's one of the major questions I get is, well, I have this great business I want to buy. It's based in the UK. And I'm like, stop right there. Doesn't qualify. So, and I've actually assisted some sellers, 2 years prior to be able to get their businesses, foreign sellers, to get their businesses domiciled in the US and start filing US returns. Because ultimately, if you have a US based online business, you're going to reach typically higher multiples when you go to sell than you would with something that's foreign owned.
And I would imagine as well, if you can get it kind of ready and pre-qualifying for SBA, right, then your pool of potential buyers, I mean, depending on the price point, I would assume, your pool of potential buyers gets, massive.
It does, and you're right, Joe. In terms of the price point, the higher the price point, the larger percentage of the buyer pool. Because in kind of the sub $1 million range, you still have a lot of cash buyers. So, and there are buyers getting financed in that, let's say 250 to $1 million. But once you push beyond $1 million, there are fewer and fewer cash buyers. So it's essential for a seller to be able to have a business that is financeable, for lack of a better term, in the higher echelons of acquisition.
What are some of the other no-nos, so to speak? We talked about kind of got to be a green card holder or be an American. It's actually got to be an actual business, right?
Yes.
So if it's just, I'm assuming, being taken under like your social security number and it's not an LLC or something like that, it sounds like it's probably not going to qualify for an SBA either.
No, if it's on a Schedule C, it would still qualify for acquisition, because the bulk of the acquisitions are asset-based purchases, not stock-based. So it would be an easy transition, because essentially, really, a new company is being formed by the buyer, and that new company is acquiring the old company, or acquiring the assets of the old company.
So when I look in the marketplace of website listings that are for sale, from any of the individual brokerages to kind of the sites that aggregate all the listings together, some of them are pushing SBA pre-approved, and they're saying that in their marketing, and some of them aren't. Why is that? Shouldn't everybody be doing that? Or
Well, primarily because if I'm a buyer and I'm interested in a $2 million business, but financing is not available to me, I mean, how many people could stroke a check for $2 million? So it's telling a potential buyer, hey, there's $2 million business, but you only need $200,000 to $400,000 down payment to acquire that business. And it opens up the buyer pool. So, and we do a lot of pre-qualifications of businesses, and we provide a pre-qualification letter to those brokers for the most major brokerage houses.
What are the big things that you're looking for, right, to get that pre-approval done? Like, help us understand, like, if we go look at a business listing and it's not pre-approved like that, so to speak, what do we need to do in terms of due diligence to know whether or not this potentially would qualify, right, Stephen, to actually be able to work with you, right, if we're the perfect person to actually get the loan? right?
So
But we're trying to make sure the business is qualified, so to speak.
So I front load a lot of things with my buyers. First I pre-qualify them, and we'll talk about that in a minute. But when they start their search, we are deeply involved with their search. And as they search for businesses and the ones that they're really interested in, they provide us with the financials of that business, the offering memorandum on that business. So I'm able to vet to tell my buyer, yes, that business is financeable through with SBA financing, or no, it's not, whatever the case may be. So if there's a business out there that isn't SBA pre-approved or pre-qualified, it doesn't necessarily mean that it's not. It just may mean that it just hasn't been. So there are a lot of acquisitions that we're involved with that weren't pre-qualified, but they do qualify.
Does the timeline have anything to do with it? Like how long it's the history of the sale, so to speak?
So yes, I mean, I look for businesses that have been around at least 2.5 years. I like to see 2 years of filed tax returns plus year to date at this point in time. Now with 2020 right around the corner, it should be easily attainable, but that's what I look for. I look for businesses that are pretty well diversified, not necessarily in how they sell their wares, but how many SKUs they have. Is it based on one product? Is it kind of a fad-based product, or is it something that's more commonly used with everybody? So I look at those things. Is it strictly FBA, or is it 3PL, or a combination thereof? So I look at a myriad of different things to determine if it's financeable.
So I guess moving into how a buyer becomes pre-qualified, right? And what are kind of the qualifications for them? So if somebody's sitting on the podcast right now, they're listening and they're like, Stephen, this sounds great. SBA loans, backed by the government, low rates, a potential opportunity for me to get financed. What do they need to look like, right? What do they need in terms of assets? What's their credit need to look like? What are kind of the starting criteria, so to speak, to know if they should come talk to a guy like you?
So once they reach out to me, I set up a buyer call and ask them a series of questions. I also have them provide me with a personal financial statement that reflects their liquidity, if they have outside income, and what their debt load is, just to kind of give me a broad idea of what they're about. So I look at personal liquidity. I also look at business acumen. So I'll ask a series of questions during that interview. If they have direct industry experience or indirect. If they have indirect, what transferable skill sets do they possess, to really get an overall profile of the buyer. And I have some buyers that have tick all the boxes, but they're trying to acquire a $3 million company and they have no direct industry experience. That's going to be a tough one. But those are some of the things I look at. In terms of credit, it's not so hypersensitive like when you go buy a house. As long as you have good credit, quote unquote, it's fine. It's not where, it's so hypersensitive when you buy a house. It's, every last numeric, indicator determines what kind of interest rate you get. It's not like that on the commercial side. So, but those are some of the things. And then I try to get a sense of what price point they're looking at and determine if their profile fits that price point. And sometimes it does, sometimes it doesn't.
And then in terms of the process, when you're working with buyers, like what's an SBA loan cost? How's the process work? Like, I'm sure that there's, got to be attorneys involved, funding time. Like what's that process look like?
So once my client's pre-qualified and goes out and finds a business, he or she goes under LOI typically. Sometimes some brokerage houses go straight to APA, but generally it's LOI. And then once I receive the LOI, we send out a loan packet via email requesting certain documents. They upload the documents to our secured server, and then we move forward with the submission part of the loan. Generally, the process, once we have everything from the clients, 45 to 60 days. It's really predicated a lot on the buyer. We have some buyers that get us everything we need right away, and some buyers, I have one buyer right now, it's been 2 months, and I'm waiting for things. And so it's really predicated on the buyer in terms of speed. One thing I need to note is that some people are kind of hesitant to go the SBA route because of timing. And usually the thing that determines time is the buyer. It's not the lender. It's not the SBA or anything. So cash transactions obviously are quicker, and all sellers probably want a cash transaction. But when you have financing available, it drives up their price point. So you got to kind of look at positives and negatives towards a buyer getting financing.
And in this space, I mean, I would say probably above what, $500,000 getting a full cash offer without terms. I mean, what are the chances? I mean, really, I don't think like an SBA should turn people off. Just my point of view. I mean, what do you see, or what are your thoughts?
My thoughts are, all things remaining equal, sellers end up getting more money for their businesses when there is financing available. They just need to be patient. And it's really not heavy lifting on their side. It's more heavy lifting on the buyer side. So it's not where the seller has to really go bend over backwards to help facilitate the loan part of it. It's really all buyer. So they just have to be patient. That it's going to take up to 60 days. That's it.
Yep. And at the end of the day, I mean, every LOI that I've done, and I haven't done that many, but every LOI that I've done, I mean, is 30 days at minimum anyway. That's your inspection period. That's when you're going through everything, vetting everything out. So, I mean, if that's happening at the same time that you're getting everything approved, it doesn't seem like that's really going to hold the process up either.
Joe, that's an excellent point. One thing that I really encourage for my buyers to do is during their due diligence process, kind of running two rails. During their due diligence on the business, at the same time they're doing the loan process. And you're right, it doesn't really add that much time at the end of the day. So, I
mean, if you were going to do if you're going to do due diligence, right, you're going to put down an LOI, then do due diligence for 45 days or 30 days, and then start the financing. Obviously, that's going to add unnecessary time. But if you do them, like you said, in parallel, yeah, I think that's a no-brainer.
And that's one thing that I would say 100% of my clients do through my encouragement is do it parallel. If something happens during due diligence that you don't like and you want to pull out of the deal, that's fine. I mean, you don't lose anything on my end. So.
Yep. On the seller side, you brought up that there's not a whole lot to be done, right? It's more on the buyer side in terms of an SBA loan. Can you talk us through that, right? What's required for them on the SBA loan?
Really just
taxes and
tax returns, financials, P&Ls, maybe some questions in regard to suppliers, but really very minimal, very, very minimal.
So I'm assuming these deals, you're looking at probably a turnaround time of somewhere around 90 days, realistically. Is that right? If somebody comes to you and they're pre-approved, so to speak, right, to get a business actually funded and out the door, get the deal done?
60 days.
60?
I would say 60 days on average.
Man, that's tight. That's better than I would have thought.
Again, it's predicated on the buyer. I have some that I'm at 4 or 5 months because of the buyer. So,
in that initial loan packet, so to speak, what are the things that you're asking for? I mean, I'm sure it's pretty simple. I mean, tax returns and things like that, right? Like
everything that you have in your possession, probably on a PDF on the cloud, on your, one of your Google Docs account or something. But basically your tax returns, your asset statements, and really just a couple of SBA forms need to be filled out, very basic. A resume, and that's really it. As it gets deeper, we do require a business plan. So now you've put an LOI in on your business. What do you plan on doing with this business? So that's one of the things that we request, as well as projections.
How formal does that business plan need to be? Are you looking for like a 10-pager, a 5-pager, a 100-pager? Obviously, there's varying degrees, right? Of
substance over form is the accounting term is. Ultimately, I've had ones that are really good that are 3 pages long. Really, you just have to convey what what skill set you have to be able to scale the business. Really, what your plan is on scaling the business. That's really what it's about. It's not all this fluff. So I've had ones that are 3 pages that are really good. I had one recently, it was 34 pages long, and I could have eliminated 30 pages and it would have been just equally as strong. So you just, and we do help them during that process, not in writing them, but we do refer them to a website that assists in writing business plans. And I've had so many people say, gosh, I'm so glad you made me write a business plan, because now I have a clear, concise idea of what I want to do with the business.
Perfect. Have you heard of Alan Dibb by chance?
No, I have not.
So he wrote a book, and I just interviewed him here for the podcast, the One Page Marketing Plan, and it's brilliant. And really, I would argue that everything that you really need on a business plan, besides projections, is on that one page.
Wow.
I mean, it is very, very well thought out. So I'm thinking, yeah, probably that one page plus projections, and your resume isn't on there either. It's truly a business plan. So if you have that one page, kind of your projections and a resume, I mean, it's all the marketing stuff that you're going to do, how you're going to drop costs, what you're like, it's all the things that somebody's going to want to see, like you said, Stephen, of really how they're going to grow the business and what that plan looks like.
Yeah, and I think the common mistake that some of my clients make is they describe the business and tell me all about the business, but they never say, here's what I plan to do with the business. That's the major thing I try to tell my clients to do, is that you need to fluff your feathers and why you're the person for that business and why the business is the one for you.
Stephen, I'm curious, what's the biggest loan you facilitated for ecom?
Right at the maximum, $5 million. Yeah.
Okay, so that's the maximum.
Yeah, maximum is $5 million. Our average is about 1.5.
Okay. Does it get substantially harder going from that 1.5 to 5, or not really? It's like if you're qualified, you're qualified.
Does it get substantially harder? There's more risk for a bank, so they're going to be a little bit more scrutinizing. And obviously the business acumen has to be quite a bit larger or higher than someone buying a $1.5 million business, but everything's the same.
What are the common reasons that you see deals falling apart in the marketplace today, right? So deals that you're actively working, you're trying to get financed, that end up not actually being funded and not actually end up going through.
That's a really good question, Joe. During buyer due diligence, they uncover something that wasn't disclosed to them by the seller. That's the common one. I just had one recently where the seller was involved in some things that he probably shouldn't have been, and got fined by the SEC. And my buyer, this just happened yesterday, by the way, and my buyer found out and pulled out of the deal.
That's a big
Although it wasn't directly because of the actual business he was buying, but it showed a lack of character on the seller's part, so he pulled out. Primarily that, I would say during due diligence.
Is there a multiple on a business, right, that SBA loans are looking for, right, for you to stay at or stay under?
No.
It's really more, like you said, based upon the buyer, so to speak.
It's based upon the business. So, certain businesses, SaaS, for example, the multiples are different than they are with FBA businesses, for example. So you really can't really pinpoint a multiple. And I know that I've seen multiple charts depending on price point, how they continue to go up. So really, it depends on the business, really. But we look at cash flow. Ultimately, SBA requires us to look at the cash flow of the business. If the business generates enough cash flow to support the monthly payment, that's what we look at primarily.
Perfect. Well, let's talk about those monthly payments and how long the loans are for, what interest rates kind of currently are looking like, et cetera. Help me break down the math.
Okay, so I'll break down the typical business or the typical loan structure, and then I'll go into that. So the loans are 10 years, not 5, not 20. They're 10-year loans, and they're different pieces of the loan. You have the business acquisition. You typically also finance the on-hand inventory that the seller has. So that's another piece. The other piece I always incorporate into the loans I do is working capital, and that's generally for post-closing inventory acquisition. So obviously, especially closing at this time of the year, the buyers want to close and order inventory ASAP for the holidays. So, and then I also roll in the closing costs into the loan. So those comprise of the entire loan structure.
Okay. And what's closing costs, since you brought it up? What do fees look like typically?
If you had to add up the SBA fee plus the third-party fees, for example, for business valuation and title and attorney and all that, it's about 4% all in, and that gets financed into the loan.
Okay. And then rates for the 10-year term, like what's normal, or how's it change, or tell me about the rates on the 10-year.
Normal is prime plus 2 3/4, which right now is at 7.5%.
Okay. Yeah. I mean, compared to anything else that you could potentially get on the market, how do you even compare?
I know, exactly.
That's amazing.
And
So go ahead, Stephen.
no, I was going to also touch on down payment or injection. Depending on the size of the transaction, it determines how much down payment you have to put in. It's called injection on the business side of things. But, the SBA only requires 10% down payment, but lenders have their own overlay. So as the per acquisition price goes up, the amount of down payment requirement goes up as well. So you could basically assume up to $1 million, a 10% injection or down payments required. $1 million to $2 million, roughly 15%, maybe 20, and then above $2 million, generally 20, maybe even 25% injection or down payment.
Yeah, that helps big time. So up to $1 million, 10%, 20%. Okay.
So it kind of scales up. Additionally, generally transactions above 2 million have some sort of seller note, although not required. But most of my buyers want to have a seller like to have the seller have some sort of skin in the game to help with the smooth transition, and they have a vested interest in the success of the business moving forward.
Okay, so you're saying deals are being structured over 2 million with some type of earnout? Are you saying, or some type of performance basis?
It can't be performance based. It's just more of a seller note.
Okay.
So a seller note for typically 5 or 10% of the acquisition price, Joe, is generally factored in. It's, again, not a lending requirement, but most of my buyers have some sort of seller note.
That's just good deal structuring. Yeah, exactly. So, any other things that you think people should know about in terms of who qualifies, what types of businesses qualify, and then how the loans are structured?
Really, one thing I want to touch on from a seller standpoint, it's absolutely imperative that sellers clean up their books, even if it means hiring a bookkeeper or, better yet, a CPA to really clean up the financials, because that could make or break the business in terms of when he or she goes to sell it. And the other thing is, if there's any sort of commingling between businesses, start untangling that web, because it'll pay dividends when you go to sell your business.
It seems obvious, right? But most people, I mean, of all the deals that I looked at, it's almost always the case. It's almost always commingled. What do you think is up and coming in the marketplace? Obviously, FBA, I know you probably, it seems like, do most of your deals, but that would just be an assumption. But what's kind of up and coming in the industry, so to speak?
In terms of our deal flow, we're seeing more SaaS businesses that are being financed. Price points have stabilized. We saw a big increase of price points from 17 to 2018. They pretty much stabilized this year. But SaaS is starting to incorporate more and more of our deal flow. Seeing a lot more of that. I like it too. I think there's, the fact that you don't have to deal with actual products. Generally it's service based, and I kind of like that. We do a lot of FBA type transactions, even 100% FBA transactions where everything's done through Amazon. We do quite a bit of that. We're okay with that. It's just all boiled down to, what products are being sold through Amazon. Is it one product or 10? I mean, what does that look like? So we definitely look at that.
I'm curious, on your point of view, is one product better or is 10?
10.
You
diversification.
Like yeah.
Yeah. So
from a buyer's point of view, like, I don't want to market. I was looking at a product as an example. I think this highlights it well. Dude, they probably had 2,000 active SKUs they were selling on Amazon.
Yeah.
I mean, their cost of goods for each item, and their profit margin was huge, but to have inventory at Amazon and minimum inventory for all those 2,000 SKUs, I mean, it's ridiculous.
It's mind-numbing, absolutely mind-numbing.
And to manage all that inventory, and like you said, I was looking at having to fund, right, for the holidays and to get all that done, right? Not only buy the existing inventory, right, but then to order for the holidays. I was like, that's ultimately what made me back out of the deal.
Yeah, I mean, there's definitely, we've done some transactions where we've had hundreds of SKUs, and it's totally mind-numbing. It is. So
Are you seeing a lot of e-com come across that is maybe some FBA, but more direct to consumer, Shopify, typical advertising routes versus just FBA? Or you'd say it's mostly FBA these days?
No, I've seen some diversification this year. I think, with some of the Amazon changes in 2017, 2018, kind of it spooked out some sellers, some third-party sellers. So I'm seeing more diversification, Spotify, as well as fulfillment diversification, being able to fulfill through 3PLs and instead of just strictly Amazon. I'm seeing a little bit of that as well.
So let's pretend I got a 4-month-old business, which I may or may not have, that is like going like this, right? I'm concerned about being able to keep up the trend of that, right? Long-term for stability purposes, and being able to exit. Right? Because I don't want it to go like this and then start flatlining when I go to sell. Obviously, it's going to make things harder. What are you seeing as the optimal or minimal timeline of sales history, so to speak, to be able to facilitate an SBA type of deal?
I think 2.5 years is a good marker. It's not a hard, fast rule, but I like to see 2.5 years. Also gives me, as the lender, some indication of what, how much dry powder the buyer needs after closing. Because the last thing I want is one of my buyers 2 months later calling me up for more money because they're out of inventory and they're being sanctioned by Amazon or something. So I've had a couple of transactions that come to mind in the last few months that were really inventory heavy. That needed a lot of dry powder, and I was able to shore up an additional $350,000 on each of them for post-closing working capital. So the biggest struggle with buyers, I think, is cash after closing, being able to have enough cash to continue that trajectory, and that's why you start getting sawtooth. So you're almost become a victim of your own success as a buyer.
Yep, 100%. And I want to talk about that and kind of segue there. Ultimately, the conversation so far has been all about really buying businesses versus building, right? Is kind of the context of the conversation. And why you would want to do that is pretty simple, right? Like most businesses fail at the end of the day. Like somebody's figured out how to do this. You're probably buying a business for 3x or somewhere around there, EBITDA, and you're getting a loan term through SBA and through Steven, for example, of 10 years, right? So you can do the math. And if you have the skills as marketers that you're being taught, right? And you really have good skills in growing businesses and marketing businesses, you can do the math and you'd understand very quickly why this is a very appealing type of model. And I don't think that there's any faster way to accumulate wealth. And that's really ultimately why I'm stuck in this space and spending so much of my time on it.
Yeah, and that's a very good point. I mean, think about it, Joe. You buy $1 million business. Your injection or down payment requirement's $100,000. The business is growing at 20% year over year. That's a 200% return on your money. Like, where are you going to get a 200% return on your money? It's a no-brainer. So to pay 3x for a business is also a no-brainer. And, it's just like the space shuttle, and I have a lot of my buyers going, maybe I'll just start my own business. And I'm like, okay, it's like the space shuttle though. It uses 90% of its fuel on takeoff and 10% the remainder of the trip. So why not buy a business that has some sort of historical track record and scale it and get 200% return on your money?
Yep. And then in 3 years, dump it and do the same thing all over again, right? Like if you did that 3 or 4 times in your lifetime, like how are you not set?
And I have buyers that have done that. They've walked away with a lot of money just because of that.
So that's interesting. They've come back to you multiple times for SBA
loans? Absolutely. Absolutely.
So what does that look like for them and for you?
Quite a few of my buyers aren't looking just to acquire one business. They're looking to acquire similar businesses over a course of time where they could have kind of a plug and play type business model where they could buy multiple businesses over time and really be able to scale them simultaneously. I love that. First off, it's exciting to see how they progress over the course of 3, 4, 5 years.
Yep.
And then secondly, when they go to sell, I mean, it's pretty exciting there because they're able to either parcel off the businesses individually or sell it as a all of them combined in one fell swoop.
Yep. So that's really like, I don't know, I'd call it like a portfolio buyer, right?
Right.
So how do you help and aid those portfolio buyers in financing, right? They come to you, they finance a deal, right? It's going well and they come back to you. Is that how it happens? And then they're looking to fund another, or they're flipping the other one first? Like how have you been able to, or what use cases have you seen with portfolio buyers, so to speak?
Usually they buy one business and maybe 6 months or a year later they buy a second business and they continue to buy businesses over time. It's not where typically they don't buy the businesses simultaneously, and it also kind of muddies the water when on the loan side of things when they're buying simultaneous businesses. So, but I've seen that as they continue to grow their portfolio.
That's where I want to be. But I've been self-funding and creative financing, all of it, without SBAs. And they're working and it's going really, really well. The disadvantage is that the cash flow is very poor because I'm shoving the cash flow right into the business, and there's not always a ton of cash flow to grow the business then, right? Because I'm just worried I'm just paying off the debt as fast as possible, basically.
Right. And I have, quite honestly, I have a lot of buyers that have the cash to pay cash for a business, and they choose not to for that very reason. They're able to finance the business, the acquisition of business, and have money left over for either subsequent acquisitions or be able to put cash that they have in reserve towards purchasing inventory or scaling that business.
I think that goes right into, Stephen, I think one of the things I wanted to talk to you about today was, are you only lending to people looking to buy e-commerce businesses, right? If I have a e-commerce business that, like we talked about earlier, an example was the money's being caught up in inventory. Do you help people in that regard kind of finance and get funding, or no?
We do some inventory funding through our private lending channel because again, my goal is to help my buyers succeed. And there are cases where they do run out of money and they don't want to get one of those crazy Amazon loans and pay 50 grand a month in debt service on those loans. So I have helped clients through our private lending channel and generally 200 to 300,000 inventory acquisition. So we do help. It's not the bulk of our business. The bulk of our business is business acquisition, but we do help our clients obtain those loans.
Okay. And you can get SBA lending though for your existing business though, correct? Right? Like,
yeah.
So you guys just don't do anything in that regard, so to speak.
You can get SBA lending in terms of what? For inventory?
Yeah, I've seen inventory, equipment, things like that, SBA loans being marketed for, but how real that is, I don't really know.
Yeah, it's not. It's questionable, and we don't get involved with that at all.
Gotcha. Yeah. Gotcha. So that's good enough for me. So the other financing options for inventory, what's a deal like that look like, or what's interest rates look like? You said obviously, Amazon money is expensive, right? Merchant financing money is expensive.
Yikes! Yeah.
I mean, and I've used some of those methods, right, to acquire things, so that I didn't have to pull as much cash out of pocket.
Right.
And ultimately, then because of the interest rates, it's all about just paying that off as soon as possible. Right. And so all the profits just getting shoved back into basically paying off whatever that high interest loan is as fast as possible. So what are the other options there that you guys deal with?
So when we do, here and there do an inventory loan, generally it's a 2 to 3 year loan, interest only, which totally helps cash flow. And generally it's around 12% interest. And generally on average, it's about for 200 to 300,000. So in other words, if someone came to us for a $25,000 inventory loan, it probably wouldn't work, but generally 200 and above. But it really does help our clients because, again, the last thing I want is our clients to be struggling post-acquisition.
Yeah, that's the biggest problem, obviously. I mean, marketing changes and you got your marketing costs, but that money is freed up pretty quickly, right? It cash flows, right, so to speak. The inventory cost can be a big problem.
And here's another thing that we do and we have done is that we have clients that have taken the bait with Amazon and have these crazy 1-year loans with, huge debt service. We've refinanced those into our product and helped cash flow tremendously.
All right, man. I really appreciate you being on the podcast. I want to kind of wrap things up. Stephen, as you look back on what we chatted about here today, is there anything you think we missed or that you think maybe we need to chat about to make sure that we do service for everybody listening?
And again, thanks for having me on. I think the major thing is not only do we help buyers, but we do help sellers. So feel free to reach out to us, either by email. My email address is Stephen with a PH at ecommercelending.com, or you could reach our offices at 813-766-4524.
Awesome, man. So we'll put your website, we'll put your email, we'll put your phone number in the show notes so everybody has it. And in parting, I'll ask you one more question. So at the end of every podcast, it seems like the show host asks everybody to recommend 3 books. We do something a little different here on Show Me the Nuggets. I want to ask you, what's the one book that as you look at your business today and what it looks like in the operations and what you have and how things are ran, what's the one book that you think has made the biggest impact on the way that you do business?
4-Hour Work Week by Tim Ferriss. Perfect. And primarily when he touches on the Parkinson's rule, which essentially says if you give yourself all day to do a task, you're going to take all day to do that task. So I really try to give myself limited amount of time to do a specific task. So highly recommend that book for all you listeners and on this podcast.
All right, beautiful. Stephen, thank you so much for coming on the podcast and sharing so openly with everybody. I'm super excited to be working with you personally, and I know that I'm sure a lot of other people will be reaching out to you as well.
Great. Well, thanks for having me, Joe. I appreciate it.
All right, guys. See you later.
Bye, guys.